Continuing production of The Open Mind has been made possible by grants from the Rosalind P. Walter Foundation, the Bluestein Family Foundation, the Joan Gans CUNY and Peter G. Peterson Fund, the Malkin Fund, the May and Samuel Rudin Family Foundation, the Joanne and Kenneth Wellner Foundation, the John D. and Catherine T. MacArthur Foundation, and from the corporate community, Mutual of America. I'm Richard Heffner, your host on The Open Mind, and in a sense, today's program can be considered the second of a series we actually began 2.5 years ago with Gretchen Morgenson, the New York Times widely read columnist and assistant business and financial editor, who won the Pulitzer Prize in 2002 for what the Pulitzer board praised as her trenchant and incisive coverage of Wall Street. Well, a great many hundreds of billions of dollars have literally gone down the drain, over the dam, up in smoke, call it what you will, since last we spoke at this table. Wall Street has crashed, and with it the savings and pensions and hopes for the future of a great many Americans. Call it recession, if you will. Depression may better fit our national mood and economy. But thanks to Open Mind intern Zeke Egan, I've gone back now and read dozens and dozens of Gretchen Morgenson's New York Times columns written since she was here last time. Ones with titles such as The End of Banking as We Know It, Stress Tests Are Over, the Stress Isn't, Red Flags That Muni Investors Can't See, AIG, Where Taxpayers' Dollars Go to Die, The Worst Misstep Geithner added to the doubt. A mortgage paper trail often leads to nowhere, and so on and so on. And I could read from dozens and dozens of these titles. And I wonder if my guest is once again going to pass her same surprisingly gentle judgment, not upon the corporate predators and their companies and their non-regulating regulators. Lord knows she's tough on them, but upon the system that spawned them all. Quote, I see sunlight up ahead, quote, Gretchen Morgenson said to me last time, and I want to ask her, how about this time?
Well, there better be sunlight, because we've sure been in a heck of a storm for how many years? We're in 2009, more than 2, almost 3. I don't remember what sunlight I was seeing the last time we spoke, but gosh, I sure would love to see some now.
Well, the last time I was needling you, I was saying that here you are, saying that you are an ardent defender of capitalism, when time and time again, even since we were together on that program, you write stories that would indicate that you couldn't possibly believe in the system. Explain that.
Well, I think that capitalism is a deeply flawed system. We have seen the flaws and the warts immeasurably since the subprime crisis burst onto the scene in early 2007. But I think that we also have to concede, or I would certainly argue, that capitalism is the best system that anyone who's interested in trying to create wealth, and that anyone who is interested in spreading wealth would normally like to see. Would like to see capitalism in what I would consider to be the truer form than what we saw in this last go-round.
What do you mean
a form
truer?
that is at least offset or policed by regulators who have an appetite to regulate. Now, we know that capitalism, if left alone, can destroy because that is what we've seen. We've seen it destroy, as you say, people's retirement accounts. The unfettered, unpoliced type of capitalism that we have just lived through is extremely damaging. But I don't think that you can fully blame capitalism. You also have to blame the structures around it that are meant to rein it in. And we had none of that.
Don't they just grow up out of the soil of capitalism?
The bad behavior certainly grows up. And again, if left sort of unreined in or unpoliced or unchecked, and I mean by the press, by regulators, by capitalists themselves. I mean, I think that is the deepest question that we need to have answered. Why do these people who benefit so greatly from this system destroy it with their short-sightedness and with their greed? We all know that greed and other human natures are as old as the hills and are to be relied upon as never going away, right? So what we have to do to protect ourselves against these ingrained natures is build a structure around it that at least checks some of these and provides some balance.
You mentioned the press. Where was the press at fault?
Well, I think that the press could have been more assiduous about questioning the conventional wisdom. The conventional wisdom relating to the idea that home ownership for everyone was a good idea. I mean, there are people who just do not have the money to own a home. And it is a noble idea that everyone should be homeowners, because there are beliefs that owning your own home increases prosperity, that it is an asset that will increase in value and therefore enrich you, that is something you can pass down to your children, that it is a way to make whole communities improve if everyone is a homeowner. I think that's a noble idea, but I think we have seen in stark, real black and white here, what happens when people who really can't afford to be homeowners are put into homes in order for bankers to make immense profits from those loans, on commissions from those loans. These people are put into homes that they can't afford, and then they're pushed out of them in these dreadful foreclosure circumstances. I mean, nobody really questioned this idea, or few people questioned the idea that homeownership was something that everyone deserved. No questions asked.
Let me ask you something. Simple question. Why? Why didn't the press, which picks up so many things on the attack, why did the press not? Was it just too nice an idea?
I think it was. And I think that a lot of the proponents of the idea, and we are talking about major corporations who benefited from it, whether they were home builders, whether they were bankers, whether they were Fannie Mae and Freddie Mac, which were government-sponsored enterprises with the idea of encouraging home ownership. You had policymakers making this argument. It was really across the board, and it was always wrapped in the American flag, that home ownership was an ideal, like mom, apple pie, and the girl next door. And so it was very hard to counter that, I think. And if you said, a certain swath of people really ought not to own their homes because they can't afford it, then you could be perceived as being elitist. I think that's a major problem that contributed to this.
Well, let me ask this. As you analyze, as an economist, as you analyze what has happened, my assumption is, and perhaps you can tell me that I'm terribly wrong here, that it wasn't just a matter of people whose incomes were so low that they couldn't afford homes, but rather that people who could afford homes, but who went in it whole hog, who went wild in this, and who were not driven to this, but lured into this by our mortgage system.
There were all kinds. There were the first-time home buyer who were lured into it. A lot of immigrants to this country who, had very low-paying jobs, but who were told that they could afford the loan because the interest rates were so low. As you remember, Alan Greenspan and the Federal Reserve Board lowered rates to 1% back in 2003, which really set off this entire race and this entire mania. And so you had low rates, and they lured people in. Well, look, you can't afford it. Here, do the math. This interest rate is so low that you can afford to buy this home. And don't worry, if rates go up, you can always refinance. Those were the arguments for the people who were really taking a chance buying a home because they could not really afford the monthly mortgage. Now, the people who, as you described, went whole hog, bought too much house or bought a far bigger house than they could afford, they too were persuaded with the same argument. You can always refinance. Don't worry. Look at these low interest rates, or low interest rates are here forever. Nothing ever, these things are not going to go up. And worst case scenario, your home price will always appreciate in value. And so therefore you can sell it at a profit if you ever get into some sort of trouble.
And what could the press have done about this?
I guess they could have, written thoughtful arguments, maybe exposed some of the mortgage lenders that were doing extremely dubious loans earlier on. I mean, we've seen these loans that were really crazy starting in 2004, 2005, and 2006. And don't get me wrong, there were people out there that were sort of lonely voices talking about this and talking about predatory lending. And there were consumer advocates and lawyers who were spotting these things and trying to work against the tide. But they got such pushback from all quarters that it was very difficult for them to get any traction.
Okay, we're speaking together at the end of May 2009. What's going to happen?
I think that we are in a interesting holding period right now. Interesting because there's a lot of hope that the worst is over, and believe me, we've been through a terrible period. Bailouts. We've got bailout, bailout of a week last summer, it felt like. And hundreds of billions of dollars in taxpayer money that we may never see repaid. So, yeah, we've been through the mill here. And so everyone is hopeful that this sort of stable period that we've been in recently means that we've bottomed and that things will start to climb again. The economy will start to turn around. Maybe unemployment will stop. Employment will start rising again. Unemployment will stop its terrible increase. You really see a sort of moment where maybe things are looking up.
And these headlines that I've read, piece after piece after piece, critical, I was going to say nasty. I don't mean that because they're relevant and revelatory. You think the sort of things that you have been writing about again and again, the bad stuff, is going to stop?
Well, while we do have this hopeful period and this sort of stabilization going on,
yeah.
I don't think that we have seen the end of our difficulties. Let's put a nice word on it, not so bad as woes, but we have commercial loans that banks have made that have really only just started to go into default or experience trouble. That's an entire section of the real estate market that has not yet been hammered as the residential market has. You also then have consumer credit card debt, which banks loaded onto people during the credit binge, which is really what the home mortgage lending spree was all about. It was all part of a very large, assumption of debts taken on by consumers and corporations. You have consumer credit card debt, which has not yet really started to collapse, those payments are still being made. You don't see the defaults on those kinds of debts that you've seen on residential mortgages. And you still see residential mortgage defaults increasing. So you sort of have three legs of this stool here, and we've really encountered the worst of the residential, perhaps, but we have yet to see the worst of the commercial real estate and the consumer credit card debt problems.
How deep will the consumer credit card problem be?
The numbers are not as large as residential mortgages are, because a residential mortgage covers most people's largest asset. And many homes are, $1 million homes, et cetera.
But it's widespread.
Very widespread. And you are going to see banks starting to cut back on their lending of credit card lending because of certain caps that have been put on interest rates by Congress. Congress has seen that these things that credit card debt has really enslaved a lot of people. Now, of course, they have to be responsible for taking on these credit cards, but the encouragement that they got from the lenders really was just beyond reckless. It's people who were not making much of anything at all, given tens of thousands of dollars in credit card balance that they could borrow, and then have to pay back these onerous, usurious rates. It was a recipe for disaster, and Congress has gotten involved and tried to put a cap on some of those rates and practices that were questionable, and banks are going to now really start to see some losses.
Okay, you say Congress has gotten involved. In your terms, how successful will these congressional efforts be? I'm not talking about committee hearings. I'm talking about bills passed and signed by the president.
Well, I think that the credit card bill that went through was the first effort, and it was the first effort because it has been on the radar screen for a very long time. There have been complaints by consumer advocates for years, really, about these abusive practices that lenders had. So that was really kind of ready to go, which is why I think it came out relatively quickly. And I think there's enough outrage out there at some of the really questionable practices that it was, relatively easy to get through, although I'm sure the bankers were in there lobbying strenuously.
Are you sanguine that the major changes that needed to be made have been made and in the dimensions required?
I think that it's a start. I think that it starts to focus these banks on that there is going to be a consequence for the kinds of practices that are, abusive, really. For instance, when a customer had maybe one late payment on one of his or her credit cards, all the credit cards would increase their interest rate. Things like that, really just take advantage of a person in a way that is not what you think of as a good business practice. It's a start.
Excuse me.
It's a start.
May I interrupt? When you say you wouldn't think of as a good business practice, what do you mean by that? Not as a legitimate or kindly business practice, but it sounds like a very good business practice if you're measuring things by the bottom line.
If you measure only on profitability, maybe it is.
Well, in the capitalist system, what do you do if you don't measure by the bottom line?
I think the best capitalists, the best corporations, the best executives really try to balance more than just profits with treatment of their employees. Their stockholders obviously are important, but so are other stakeholders, their customers. That's, I think, a model for capitalism that can work. Not this sort of profits at any cost, because we've seen, if nothing else, in this horrible period, the cost of profits with no consideration for anything else.
Have we seen?
Yes, profits of mortgages that were given to people who could not afford them ultimately. Now we're all paying for those bills. The shareholders certainly are paying the costs, but so are we all the taxpayers. Ditto for the credit card practices. When we start to see losses from banks and credit cards, we're all going to pay those bailouts that have been given to Citibank, to Bank of America, if we don't get that money back, that will have been our cost, my son's cost, children's, grandchildren's costs going into future generations. We've all seen the consequences of a sole pursuit of profits without any consideration for whether it's right, whether it's ethical, whether it's moral. If we can't learn from this, I think that I'm very hopeful that we can. Let's just say that.
Okay, I get the point that you're very hopeful, but then I think I was reading from some of these headlines, the stories you've written, they date from January 22nd, 2007, when we did our former program, to the present. But there are others, dozens and dozens and dozens of articles that you wrote from before that time. They didn't bring about the changes that one would have thought. So it took the kind of catastrophe that we've experienced. And now, are you sanguine that, what are you going to write about if we've learned this lesson that you think we have?
Unfortunately, there will always be people, or fortunately, there will always be practices that are questionable that I can write about. I have confidence in that. However, I think that if we can get it right this time, I am hopeful that the biggest, blue chip, most respected corporations that have really fallen down so badly in this episode, I would hope that they would want to dust themselves off, clean up their acts, and do the right thing for all their stakeholders.
I can hear the strings in the background. I can hear the music playing. And you really feel they will? I know that you hope so.
You know, one of the things that I try to do when I write my articles is to shine the light on practices that I think are dubious, because that's the only way that you can really get the attention, perhaps, of regulators. That's the way to get consumers aware of practices that are, perhaps taking advantage of them. It's a way to kind of shame companies into doing the right thing. And I have no problem with that, because I think shame is a very valuable pursuit.
And
we seem to have lost a sense of shame in this country as far as business practices were concerned. I mean, I would have been ashamed to lure some, person whose first language was not even English into a mortgage that they couldn't possibly understand, that was punitive in certain aspects of it, that took their last nickel from them so that I could get a commission, so that I could buy my Ferrari and my boat and my McMansion. I would have been ashamed to do that. And I don't understand how people sort of got lost in that pursuit.
You seem to be saying that they got lost in that pursuit because the press did not point the finger of shame at them.
The press was one group that could have done better, but it is not the policeman for these businesses. The regulators were absolutely asleep at the switch, Dick. They were watching something else, or euphoric about home ownership for all, or being lobbied. I don't know what it was, but their actual regulatory jobs were not being pursued. There were actual laws on the books that would have required mortgage lenders not to do these kinds of loans, or to make it clearer to people of the high costs associated with these loans. But there were very, very few regulators who were willing to police them. And so therefore they just went crazy, and people did them to a fairly well.
Okay, you say asleep at the switch. Mm-hmm. What put them to sleep?
It's very difficult to get inside people's heads and to know what they were thinking. But you do know that there was an overarching view that regulation was bad, onerous, restrictive, that jobs would flee the United States to overseas if our regulations were too tight, that it was bad for business, that it would crimp profits and therefore, jobs would be lost. That was the argument. And to the degree that it was very pervasive, very pervasive.
Do you think that the tragedy of the last year and a half has rid us of that kind of thinking?
I don't feel that it has completely rid ourselves of that thinking. I see too many people in Washington who were, by the way, very big proponents of the anti-regulatory push, who are in positions of power, and you have to wonder if they have actually come around to the view that regulation is in fact needed, necessary, required to ensure that capitalism doesn't go off the rails like it did this time.
That's a very scary observation.
I would like to see more in the way of intelligent regulatory framework for Wall Street and the financial industry as a whole. We really haven't seen any kind of a push that is going to change, for instance, the regulation of derivatives, which are these extremely complex contracts that trade in the trillions of dollars, and that were central to the failure at AIG, which has cost $173 billion in taxpayer commitments.
Well, we reached the end of the program, and you've scared me more than I thought I would be scared by this. But that means that you're going to have to come back in the future and say that now things are rosy. Thank you so much for joining me again.
I hope to. Thanks.
And thanks, too, to you in the audience. I hope you join us again next time. And meanwhile, as another old friend used to say, good night and good luck. And do visit the Open Mind website at theopenmind.tv. Continuing production of The Open Mind has been made possible by grants from the Rosalind P. Walter Foundation, the Bluestein Family Foundation, the Joan Gans CUNY and Peter G. Peterson Fund, the Malkin Fund, the May and Samuel Rudin Family Foundation, the Joanne and Kenneth Wellner Foundation, the John D. and Catherine T. MacArthur Foundation, and from the corporate community, Mutual of America.